Hello, you're back. I'm glad you're back. This is our next session in doing a cash flow statement. I believe I assigned you new Warnick cash flow statement to do for today. Is that right? So we're going to go through that in a few minutes, but I want to address a few questions that I have received from you all in regards to some things that we've already covered, okay? And when enough people ask me a question, I think, well, maybe I should just answer this on camera for anybody who might be confused. So let's go back to, remember the handout that we did that looked like this with the 20 on them? Okay, I want to contrast something with you. Okay, I want to take a look at, matter of fact, I'm just going to rip it apart and let's look at them together. Number 15 and number 17, okay? Now this is when we were calculating cash flows from operating activities. Remember when we did this last week, guys? Okay. Now, this increase in land, did we analyze that change in that asset? Why did we not analyze that change in that asset? You're correct.
Long term.
Because it is long term. So when you look at the answer of number 15, which I'll put up right beside it, see if you can see both of them at the same time. Okay, we don't analyze that change, that increase in land, because it is a non-current asset, correct? Okay, now I want to contrast that with number 17. Look at number 17. On number 17, we have a loss on the sale of land. Now, do we add that to net income in calculating operating cash flows? Yes, we do. But every now and then I have somebody say, now wait a minute, I didn't analyze that loss because it's on land, and land is non-current. No, listen to me. All losses are added back. All gains are subtracted out. We analyze all losses and gains. Are you with me? But the change in the account itself is not analyzed in the operating section. Does that make sense? Do you understand the difference? Okay. All right. The other thing I wanted to touch upon is, do you remember when I did that example of we had a fully depreciated truck and it went kaput and died on us, and we gave it up and there was a loss on it because there was $4,000 book value, and so we added that loss back to net income because it was a situation where that loss had been originally deducted in arriving at net income, but it wasn't a cash outflow, so we added the loss back. You with me? And you understood why we did that, right? Because we're trying to move from a net income number off the income statement that's sort of an accrual number to a cash flow from operations, which is almost like a net income from operations if we would use the cash basis. Now, some of you accept that example, but I had somebody say, but that doesn't, how does that work with gains? Because what if you sold it and you had a gain on the sale? You see what I'm saying? They say, why would you subtract that out? Because cash came in. Let me give you a real quick example, okay? Let's look at the Elmo. Let's say you have another truck, and let's say you paid $30,000 for that truck, all right? And let's say that the accumulated depreciation on that truck is, oh, let's just make up a number, $27,000, okay? So you've had the truck for a while. So the book value of that truck is $3,000. Are you with me? Okay. Now, let's say we sell the truck for $4,500. Okay? Well, let's replicate the journal entry when we sell that truck. Okay? Well, we take the truck off our books because we don't have it anymore, right? So we credit truck for $30,000. We also have to take the accumulated depreciation.
Shouldn't it be $3,000?
No, that's great. I'm glad you asked that. But we're taking the truck off at its cost. Okay? So I'll show you here in a second. We debit accumulated depreciation for $27,000. So by us making these two entries, we're taking that net book off of $3,000. But we do it by taking the cost off and then the accumulated depreciation. Does that make sense? Okay? All right, the next thing we have to do is we need to record any cash given or received. Now, we didn't have this in the previous example, did we? With the truck that we just gave away. But here we've received cash of how much?
$4,500.
$4,500. Okay? So I am going to debit cash for $4,500. Now, that journal entry doesn't balance, does it? So we have to credit something for $1,500. Do you know what we credit? Gain. Gain on sale. And remember, gains are kind of like revenue accounts. They're added in arriving at net income. Now, you've done a whole complete cash flow statement. But we are going to subtract this gain out of that net income number in the operating section. Now, down in the investing section, it will say sold truck for $4,500 and it will show that plus $4,500. It will say that. But do you see where if we didn't subtract that gain out of that net income, it almost is implying we received $6,000 for that? Do you see that? Does that make sense to you guys? Yes, we're going to show in the investing section sold cash for $4,500 plus $4,500. But we still need to get that gain out of the net income. It was added in arriving at net income, but we didn't get an extra $1,500 because we sold it at a gain. So we have to subtract the gains out, add the losses back. Does that make sense? Okay. All right, cool. All right, now let's go over to the new Warnick. How many people got that to reconcile? Okay. Now the nice thing about cash flow statements is you know what the answer is, right? You know what the answer is. Let's hop over to the computer, okay? Now, I know that this is where we need to arrive at. Is that correct? Can't I analyze the change in cash right here and say, okay, cash increased by $1,300, right? So the net change in cash is plus $1,300. The beginning balance of cash is $24,000. The ending balance is $25,300. I know that this is the answer. So I know that I'm going to have three numbers here in yellow. And by golly, those numbers, they have to add up to 1,300, right? If they don't add up to 1,300, we know we made a mistake. Is that correct? Okay. All right. What's the first thing I always have you do? That is prepare the operating section. Isn't that the first thing I taught you?
Yes.
Okay. Now you guys have done this enough. What'd you get as your net operating cash flows? Anybody?
4,300.
4,300. Very good. And you just did that the same way. You took the net income, you looked to see if there were any non-cash expenses that you needed to add back. Of course, you got that off of the income statement. Got the net income off of the income statement as well. And then you analyzed, we had some current liabilities, didn't we? Or, I'm sorry, current assets and current liabilities that need to be analyzed. Now, we don't analyze the change in cash, even though it's a current asset, because this is where the analysis of cash happens, down here in the green part. The whole cash flow statement is an analysis of the change in cash. But here are the current assets that we need to analyze the changes in. Here are the current liabilities we need to analyze the changes in. And you can see that that is done right here. Is that correct? All right. Any questions on how we arrived at those operating cash flow numbers? Okay. Well, what's the next step? The next step, I always say, is to go down to the additional information that they give you. Now, in real life, this would be information that's readily available. I mean, look at these transactions. Selling a long-term investment, paying dividends, purchasing plant and equipment, issuing stock. These are not going to be transactions that are hard to remember or hard to find records and validation for, okay? So, in real life, you would have this information, okay? So now you go to that information, and I want to classify it, and then I want to say if it was an inflow or an outflow, okay? Okay, now who are we? We are New Warnick, right? That's who we are, okay. Stock in Bowen, held as a long-term investment, was sold for $9,000. What type of activity is that?
Financing.
That is an investing activity, isn't it? Because isn't that a long-term asset? Now you have to read those carefully because it may look like we're issuing stock, but we're not. We have a long-term investment that we sold. It's a long-term asset. So that's investing. Is that an inflow or an outflow? Inflow of cash. Good. Dividends were declared and paid. What type of activity is that?
Financing.
Financing. Is that an inflow or outflow of cash? Outflow. During the year, there were no disposals of plant equipment, although there was a purchase. Okay, well, what type of is a purchase of plant and equipment is what? Investing. Is that inflow or outflow of cash?
Outflow.
Outflow. Cash is leaving us. And then finally, additional common stock was issued during the year. What is that?
Financing.
Financing. Is that inflow or outflow of cash?
Inflow.
Inflow. Okay? So it looks like we have two investing activities. One's an inflow, one's an outflow. And we have two financing activities. One's an inflow and one's an outflow. Would you agree? Mm-hmm. Okay. So now we go back up to our cash flow statement. And we put those items, and this is what I got. Okay? You with me? When we sold that investment, $9,000 came in of cash. When we purchased that equipment, $12,500 of cash went out. That's why it's negative, as notated by the parentheses. When we issued stock, $8,000 of stock came in. Let me say that again. When we issued stock, $8,000 of cash came in. When we paid dividends, $7,500 of cash went out. You with me? And I add up those three numbers, and by golly, by gum, they add up to $1,300. And I knew they needed to, right? And there's our cash flow statement, except we need to make sure we title that thing up properly, right? Okay? You can do a whole cash flow statement. Isn't that cool?
Could you explain again why the purchase of Bowen stock was an investing activity and not a financing? Because typically you think of stock transactions as financing activity.
That's a great question. You're talking about this one down here, right? Stock in Bowen Company, held as a long-term investment, was sold for $9,000. Well, it goes back to kind of that general rule that I had. Okay, well, let me ask you this, Erica. Remember when we did this assets plus liabilities plus owner's equity? Does that ring a bell? Okay, I hope so. Remember how I said investing has a tendency to be long-term assets, and financing has a tendency to be long-term items on this side, okay? Now, would you agree, Erica, that if we purchased a vehicle or sold a vehicle, either one of those items would be an investing activity? Okay, well, a long-term investment that we hold, it's not stock in our company. Just like you might have investments, you know, your savings account, or maybe you've bought some stock or you have a mutual fund, companies can do that as well. They have assets on their book that are long-term investments. And it is a long-term asset just like that truck or just like that vehicle. So if you buy or sell a truck, it is an investing activity. It's a long-term asset. If you buy or sell a long-term investment, it's a long-term asset, just like the vehicle. Does that make sense?
Yeah. So the stock you bought from Bowen was not our own owner's
It's
equity.
not our own stock. And it's stock, that's why I made a specific reference. Who are we? We are New Warnick, right? Stock in Bowen, that's a different company. Okay, just like if we bought stock in Sprint or Microsoft.
Yeah. So to us, the stock in Bowen is a long-term asset.
It's a long-term asset.
It's not our own equity.
That's correct. It's a long-term asset on our books,
Okay, so-
just like the truck is a long-term asset on our books.
So if the stock were our own equity, it would be
Then
a
it would
financing.
be financing.
Yeah.
Yes. If we were buying our own stock, treasury stock, then it's a financing. Good. All right, cool. Let's take a look at that again. Any other questions on that? That was a great question. Now I want to show you something that's kind of cool. Now I already told you one of the cool things about a cash flow statement is you know the answer, don't you? You know what it has to equal. And if by golly, if those three numbers in yellow don't add up to 1,300, you've done something wrong. Okay?